All righty. Thanks for vibing with me, guys. That was very fun. Let's start. We are live. All I do is listen to music and code. That's my life, and it's lovely. Welcome all. We may be joined by Max. Let's get him on the stage. Hey, Max.
Hello, everybody.
All right. So we'll let people file in, and then the purpose of this call is actually going to be a tutorial of sorts where we explain some of the finer points of the paper that we're releasing, which we'll put into the chat here. Now, this is not a final version. That version will be released tomorrow with some small edits and polishing. But the gist of the argumentation and the points and the expositions and the mathematics will be in just about the same. So we want to go through this paper and we'll do some like simulation. I might do some coding. I'm going to open a Miro board, explain some of the concepts, some of the design decisions. Max knows all of it really well. Then we'll open it up to some questions at the end if people can come up on stage and we can discuss some of the finer points in detail. Sounds good, Max? You're muted.
Sounds like an absolute plan. Let's do this.
Let's fucking do this. Okay. All right. Well, let's start with, and I've done this a number of times, but like starting with the major problem. Let's bring my screen up. You guys are well aware of the root network, and there are a number of problems with the root network. One is collusion and cronyism, but I think the biggest one is just pure apathy, and also the limitations of humans to be able to judge and rank and actively validate a very large set of individual subnets. So dynamic TAO's core premise is that we can solve that problem, the allocation of TAO, by using market dynamics, letting a large group of people move their funds around the ecosystem and selectively pick the subnets that are actually performing well with some risk involved. If we don't have risk, people are not going to be incentive aligned and they're not going to make good decisions. So we want people to make good decisions about the allocation of TAO. But that's it. Like the core problem is how do we allocate TAO towards different subnets? Okay, so I want to talk about what that looks like. So let's go. Here's the paper, guys. We'll share it a bit. Let's go into a Miro and draw this out, right? So we have the Coinbase. Here's the Coinbase of bittensor, and we have these subnets, subnet 1 through n, through n. And we have a job of distributing an emission vector, splitting it up, 1 tau per block right now, but in the future it'll have, amongst these subnets. There is a number of ways of doing that. And as you guys know, we're using a Uniswap pool between each of the subnets, the stake in the subnet, so that individuals who are staking in change the price, and they push more or less tau into the subnet. And you guys know that we're using that signal, but there are a variety of ways that we could use that signal to follow the emission of tau. So I want to draw, actually I'm going to draw it out. I'm actually going to code it up for people, what this emission, can you see my screen? Looking great. I want to code up what this problem looks like. So we have an emission, let's say it's 1 tau per block. And we have some subnets. Subnets. And we have to go through those subnets. And we wish to inject tau into these subnets in a way that it incentivizes the subnet participants to make good commodities that are valuable to people. So the emission vector that we create for these subnets has to in some way relate to their performance. So on testnet right now, the way that we do that is we look at all the reserves, and we look at how much tau is in each of them. And the amount of tau that we inject into the subnets is their amount of tau reserve divided by the total. So this is the total part. This is absolutely what is on testnet right now. So we look at the relative proportion of tau in this subnet. And what we do is we pick an amount of alpha, which is called alpha in, which is related to this tau in, so that we don't affect the prices of the pools. Now, I'll explain why that's super important in a second. But the way that is written would be S of price over, sorry, pardon me, it's actually the way around. Tau in divided by S dot price. So this is the amount of alpha that if we inject tau in, the price is not changed. So if we take our subnet and we actually inject this amount, tau in and alpha in, the price will not be the same. It will not be this different before or after. So the price here, same as price here. All right. So we investigated a number of ways of doing this over the year. As you guys remember, one of the original designs was just the tau in was going to be equal to the normalized prices. That's in the bit 1 paper. And alpha in was going to be equivalent to just 1 all the time. The effect of this, however, is that if you can manipulate tau in, you can actually manipulate your price. And so created sort of a recursive structure where people could manipulate their price to manipulate their price even further, and you could have runaway subnets that manipulate bittensor. Later on, we decided to use the reserve N1, and as you guys know, this would push people's prices to, over time, match the reserve ratio. So if you had 10% of tau, the effect would be that your price would converge to 0.1, as in 10% of the reserves. It's our belief now, the best thing that we can do is actually separate the injection strategy from the price altogether. So this is what this design does. So subnets are rewarded not by having their prices pushed by the chain, but they're rewarded by having more liquidity at the current price in their subnet. What's really interesting, though, about this design that we have is that it is totally reasonable for us to investigate different ways of computing these two terms, the total and the tau in, to reflect any type of thing that we want to incentivize in the ecosystem. So one of the consequences of using the tau reserve, which is currently on testnet and will probably be, well, which will be the design that we push out at launch, is that older subnets that have been around for a very long time have a very strong advantage in the sense that their tau reserves will be very large relative to new subnets that will have very small tau reserves, and therefore there won't be any liquidity injection. The nice thing is, though, in the future, we can actually change this design. We can change these two aspects of the protocol to be whatever we want them to be. So this, for instance, could be replaced by some function. We'll call it AI function of the subnet, where this is some complicated estimation of the value of a subnet, perhaps determined by an on-chain artificial intelligence, or perhaps it's a complex financial equation that measures the amount of tau that has been injected into the subnet over a short period of time relative to its price. In fact, I'm working with Owl Ventures, Tau 5, pardon me, Igor, and he has a variety of ideas about how we can improve over time this function so that it does a good job of actually following the market signals from individuals in the system, but also being intelligent on top of it. So although we have currently this design on testnet, which solves a lot of problems because it's very difficult to manipulate. Here we go. This is what it looks like today. In very short order, what we're likely to switch to is we're using the subnet prices, so the relative prices, likely with the moving average, and this is what is written up in the paper as we use a moving average of the price. The effect of this will be that it is actually very difficult to manipulate the moving average taken over a long period of time, but the chain is following the absolute price signals from market participants in order to determine where liquidity should be injected. The positive consequence of this is that new subnets that come around in 1 or 2 years still have the ability to lift their prices up to reasonable levels to attract liquidity injection. So this is like the core of what dynamic tau is. There's a lot more to it, but this is like one of the most important things. This is what we've been working around for a very long time, trying to investigate the best way of injecting liquidity so that we don't pump prices, so that we keep the thing stable, so that new subnets can join over time. And we've done a lot of work, and some of it is in this paper, which we'll talk about in a second. What are some of the things, Max, that we should speak about? Like, I think there's some really important pieces of this paper to go through. So this paper investigates this specific design. It talks about the motivation and what dynamic tau is. These are the first 2 pages. We also discussed just some core AMM stuff that people are very familiar with. Max, do you have something to say?
No, just agreeing with you so far.
Yeah. We define the core injection strategy that I just spoke about on the screen on section 3.2. This is it in pseudocode for those that are interested in this. We also talk about the staking and unstaking mechanisms and the purpose of root tau. This is actually another thing that I think I'd like to talk about on this call. So to make sure people understand why we're using root tau and how it works. So there are really 3 justifications or 3 reasons why we decided to have tau that is staked on root still exist inside the mechanisms. One of the first reasons is that people were looking for a risk-free way of staking their tau. So when you stake on root, it is risk-free, and that's beneficial. But there are a number of other reasons why we want to use root tau. One of them is that if we transition automatically and immediately to using the alpha tokens on the subnets, it completely destroys the current consensus mechanism. So over a single block, the consensus in all of the subnets will change, and a lot of people will be deregistered, and there'll be all sorts of chaos injected into the system. So by annealing slowly who has weight inside the subnet, starting from basically who has weight currently, over the year and further towards the people that are holding tau, holding alpha, we slow down that chaos. Another reason is that if we use the alpha tokens immediately, their APY is exorbitant, shockingly high, as is written in this paper, up to 2,000% for the first alpha tokens that are emitted. By using the tau weight, we actually smooth this over. So those early tokens don't have 2,000% APR, depending on the tau weight, and then increases slightly over time. And the final reason for this design decision, is that it's not possible to attack the networks early on when they have low market caps. because the economic security of the proof of stake mechanism in play of human consensus is maintained. The economic security is maintained by the pure weight of all of the Tau and root. So it still will cost multiple billions of dollars to attack these ecosystems projects for the first year or so, and then slowly moves over to the alpha token effectively being detached from Tau and being able to govern its own subnet in a big way. So we talk about this in the paper, which is really interesting. I hope people understand this and agree with our justifications. Some of the things about the tokenomics of the subnet tokens, they all have 21 million, they all have 21 million cap, as you can see in the figure 5 on the screen right here. Although they have different inflation rates and slightly faster inflation rates, up to 2 times as fast, they converge to the 21 million for Tau. So we all converge to 21 million, and that makes, I think, the economics easy to understand for people in the network. Going forward, there's a lot of mathematics in here. I know this people's eyes will glaze over, but we talk about the consequences of the injection scheme and what it means to the overall market caps of the subnet tokens. And we show and prove that it doesn't affect the market, and it's very difficult to manipulate this injection scheme. So this is beneficial. And the appendix also has some interesting dynamics explaining how the APY for the tokens is equivalent to the root weight. So this makes it very easy to understand from economic position, like whether or not somebody should be staking or unstaking into subnets to maximize APR. And finally, we talk about the root claiming mechanism, which is on chain right now to allow people to both take their dividends in Tau and also in alpha tokens. So let's drop this paper in here so people can read it. Why don't we do that? Max, actually, why don't you do that for me?
Yes, sir.
Thank you. Fantastic. Latex enjoyers, absolutely. There are a couple other things to talk about. So the pure injection strategy is something that we've been working on for a year or more. We really think the original design probably would have failed without the help from a large number of people, Isabella and the audience, Pigeon, Max. There's some other qualities to it that are worth mentioning. The fact that we can change it in flight if we want to incentivize different types of performance in the ecosystem is incredibly beneficial to the ecosystem. The fact that the amount of issuance of Tau is fixed, alpha is fixed at 21 million. The design works with halvings, so nothing will change for people on the halving events. And the number of dividends that miners and validators will get per block is consistent. So when it comes to making predictions about how much you should be making per block, that's a consequence and a good consequence of the design. Max, what are some other things that we should chat through, or perhaps you have some questions to lead me here?
I think we can. I think it would be valuable to discuss, and it's one of the sections in the appendix, like the fact that we know that it should be more valuable to be a subnet player rather than just a simple root staker. I don't know if you want to begin the discussion there or want me to do it, but
yeah, absolutely. So in our analysis, one of the questions that we wanted to know was, are we making it unduly difficult for people to actually participate in dynamic Tau? So it's a really good question. If I'm just sitting on root and you're an allocator, you're somebody that's actually participating and moving your Tau around, on staking from subnets and staking into others to help us direct the emission flow of bittensor. Is there an advantage or a disadvantage relative to somebody that's just holding root alpha? And what we've seen is that by design, the dividends of people that are just purely holding Tau and root does decrease. But if they actually choose to allocate those dividends back into the subnets, if they take their TAO rewards and they put them back into subnets, they do fairly well. And it actually requires quite a lot of sophistication on behalf of somebody that is moving their TAO around to outperform the base strategy. It's sort of like holding the S&P 500. I think that's actually quite positive because if we want, it shouldn't be too easy, right? And we should be requiring that people that are performing this action of governing bittensor are indeed the smartest people out there. Where else should we go with that, Max? Like, a good question, but like, what are
I
some
think it's
points that you?
actually just as an interesting observation with some brief analysis, we can expect that, over the long run, the root stakers will be earning exactly the root proportion percentage of in APY what the alpha players are earning. So like it's an interesting sort of emergent phenomenon that this root proportion starts to pop up everywhere throughout the protocol, which in my view, like when you start to see these sort of it's a very simple but emergent phenomenon, you have sort of a beautiful system. So, it is in fact the case that we have an expected APY of root stakers being exactly root proportion of the alpha players or the subnet players, I should say. Um,
Yeah. And it acts a little bit like a interest rate of sorts for the entire ecosystem. Uh, Nicely, we can peg it, and our choice to peg it is really to think about the value, which is somewhere between too much chaos injection and not fast enough. So we're looking at 18% right now for the root weight, but it's possible that it's lower than that depending on the results that we get from the testnet. So we haven't yet defined what the absolute root weight is going to be, and that won't come out until the actual launch of the code base onto main.
so
So yeah,
Jake, if I
yeah,
was, somebody malicious, we know the pools are starting with low liquidity, and I'm gonna try to drive up the price of some subnet. Why is that not gonna work for me?
yeah, it's good. It's a really good question. So first of all, because we use the tau proportion in the pools on launch, it'll be especially difficult to manipulate that in a way where you're seeking to gain like control over the liquidity. First of all, just because of slippage, right? So you can try to push a bunch of tau into these pools, but it's very difficult to move a lot of tau. So manipulating the current reserve ratio design is very difficult. Moving to prices would allow manipulation because people can obviously pump prices in a low liquidity regime. But instead of allowing that to happen in the low liquidity regime, we'll likely use a moving average, a very long moving average. So in order to manipulate the tau in, you have to do that over a very long period of time. That's the design that we have in the papers. We think it's the best one long term for bittensor. But it's an important point that we're going to start with the tau reserves, which is extremely difficult to manipulate, and will reflect the fact that all of these subnets start on an even footing when it comes to their tau reserves, and in the short term, will be exactly what it's a very good signal for whether or not they've actually attracted more investment or lost it.
And in the
Great.
scenario where we're using prices, we'll add that because of the root proportion, even more simple than making it hard to affect consensus, root stakers are earning rewards which can then be sold to, so if somebody's trying to drive up the prices on a subnet pool and the root stakers feel that that is disproportionately high price, they can then, essentially punish that person by bringing the price back down to what the true market value is. Um, so it's just yet another angle on why it's not very easy to manipulate this thing, especially even in the early days when liquidity is low.
Precisely. Cool. So this is the paper. It's just the paper. I think let's actually like see if we can simulate a debate. Like, I would love to talk through some of these design principles with people that are informed, and ask questions of people that want to come up on stage. So I'm going to call in some people to come up here and help us with this conversation. Like I see Sammy chatting. Like I'd love it if Sammy goes up on stage. David, we've got you. You have some comments. I saw them in the Row channel. Hey, Dave.
Hey, Cons. How you doing?
Good.
Can you hear
Welcome.
me? All right, cool.
Yeah.
Yeah, I'd love to talk a little bit more about sort of the alpha in piece of the equation. I've been trying to kind of better understand the thinking there, and I know from the previous design, we're sort of pegged at 1. Now it's pegged to keep the price consistent, which does sort of vary the amount that goes in there depending on the pool. Can you just talk a little bit about that and just kind of how you guys decided on netting out there?
Yeah. So why did we choose? So one of the consequences of there is still an incentive. I think your point in the Row channel was there's no incentive to increase your price, right? It was kind of your point.
Well, yeah, I'm just trying to, yeah, I mean, I think that one of the concerns I've had is just around the downward pressure, kind of on subnet price, and sort of what that means for, someone coming in and backing
Right.
a subnet.
Well, it's not the alpha in that has the downward pressure, right? So the point we were making earlier, I guess not very well, was that the injection strategy does not affect the price. What it does is affect the liquidity at the current price. So it doesn't the alpha in is pegged to specifically have nothing to be agnostic to your price. Does that make sense?
Yeah, no, it does. And so, I mean, in the previous design, the alpha in was, I believe, was creating more
It's-
downward pressure because it actually was always consistently 1. Um,
Exactly.
And so in
Exactly.
this scenario, it will just peg to whatever keeps the price the same. So it's adding more liquidity at that point. Okay. Yeah, that makes sense.
Yeah. So there's still a very obvious incentive for people to want to maintain their price high, just obviously because you want a higher price for the token. But the chain is sort of helping maintain the stability of your higher price by injecting liquidity matched to that price. So it is actually incentivizing or like holding you close to that price by adding liquidity right there. That's how Uniswap pools work, right? So we're sort of um, we're calling your price and saying, hey, let's hold it here, right? We're adding liquidity. Dave, thanks. Does that clear up your concern?
Yeah, no, that's helpful. That's definitely helpful.
Sammy, I heard you typing. I heard you, saw you.
Yeah. Hey, what's up, guys? So I'm just getting caught up on some of the new changes, and it looks like now root stakers have the option to earn in dTAO. So I think it'd be good if you could just talk about that, like which is set by default. Is auto swap turned on by default, or is it the other way around? And then, I mean, I heard Max talk about how he believes that if a subnet price starts getting out of hand, that the root stakers can step in and sell into that. I mean, I would. I mean, I've been kind of pushing back on that for a while because I think people who are looking to participate in root TAO don't want to be active, and so they're not going to be actively monitoring the situation and looking
Right.
for opportunities to kind of balance the system, right? Like that's not the job that they want to take on. So yeah, I guess if you could
Yeah.
just start with explaining like what the default is, and then
Well, let's
answering
talk
that
about
question, that'd be great.
yeah. Let's talk about the problem itself because I think it is probably one of the most difficult problems that we've ever tried to solve with inside of bittensor, and it is at least on the face of it extremely interesting. So for those people that are listening that don't understand what we're talking about, um, we're discussing whether or not the dividends that are earned by people that are staking on root when their validator is validating within the subnets should be accrued to them inside of that subnet token or accrued to them in tau. Now, there are multiple consequences of either of those choices. If they are accrued to them in the subnet token, one consequence is that people get allocated into the subnet tokens without having to purchase or participate in sort of a fairly, maybe from their perspective, frightening market. And instead, their dividends are just accrued to them. They get to be allocated risk-free into the subnets. That's one consequence of paying people out in the subnet tokens. One negative is, as you say, it's a bit of a design. It's a UI nightmare because you get, as the number of subnets increases, the number of airdrops goes to infinity, and you end up with a basket of dust, as Mog would say, that is neither interesting to you nor simple to understand. Alternatively, selling the root divs, taking the dividends that were owed to the validators thus for their nominators that are staked to root, and selling them their alpha tokens into tau. One of the consequences is more liquidity into the pools, which is available to people that are allocating, which is a benefit to people that are choosing to allocate into subnets because there is more liquidity to purchase. So the dividends that are being sold as a consequence of root proportion is available potentially at a cheaper price than they would otherwise be to people that are choosing to allocate. It creates downward pressure on the price as a consequence of having to be sold automatically, as one can see inside of the testnet charts that are available on Tau Market Cap and Tau Stats. It does have the effect that it stops runaway prices initially, right? So if there are non-active participants that are getting dividends en route, just by the default being a sell operation, we suppress prices. That makes the charts look kind of nasty at first. Another thing to think about, though, with this design, for those that are listening, is that what will happen is that there a lot of people that are Tau holders today will not be subnet token holders, for good or ill, creating a bit of a schism between the people that are holding Tau and those people that are holding subnet tokens. In fact, if we sell root dividends by default, the average holder in Tau will hold likely none. So they'll just simply hold Tau, and the only people that hold the subnet tokens will be the validators that have actually allocated the alpha token, and the miners and the subnet owners. So that's like kind of a collage of all of the considerations. What we're trying to do, Sammy, is trying to make it so that we weren't able to answer that question. So what if we could make it so that people can selectively answer that question for themselves? Do I choose to sell my root dividends into Tau and take that decision, or do I have the opportunity to take them as airdrops if that is my decision? So some people might have different ideas about what the best strategy is, but also just what they want and what their preference is. But it still raises the question about what the default strategy should be. And this is in no way an easy question to answer, because we're making a decision on behalf of a very large group of individuals, and and the question is, which one should we give them? What should we give them the best decision? Right? Like, should we make that decision the one that we believe would be the best outcome for them in the long term? Should we make the one that we think is the best for bittensor as a technology? Do you think we should make the one that is best for a UI perspective? Which one will actually look good for people? Which one will reduce complexity? Which one is better for tax implications? Which one is better for legal implications for the technology? It's a super difficult problem. So anyways, there's the preamble. So Sammy, but to answer your question, do we go for a default of airdrop? By the way, I've heard that airdrop is a really bad term to use, but for the purpose of just explaining, that is the term that makes sense to people. Or do we go for default root selling? So let's just open it there, Sammy, so you make sure you understand all the considerations and and then maybe you could re-ask your question.
Yeah, no, I'm following you perfectly, and I'm eager to find out which one you decided for being default because I'm with you. I think this is a really difficult decision. I'm not sure which is best. I could discuss pros and cons for each model, but I'm curious what you guys have landed on.
I
It's
will
very funny
argue.
story. Yeah, go on, Max. Go on, Max.
Okay. I will argue that you mentioned you are worried that root participants won't sell their alpha tokens in the airdrop scenario in the case of price manipulation. I think that is a not a legitimate concern because if I suddenly realized I had thousands of dollars in an airdrop because the price had gone way up, uh, it's in my economic best interest to do that selling. So maybe a few people are so apathetic that they miss out on those gains. But as you see that your airdrops are becoming super expensive or something like that, you would be foolish to not do that selling before somebody else on route does it for you. Does it before you, I should say, not for you.
Yeah, I guess though you just don't have that feeling where, you have any capital at risk, and so you're just willing to let it ride, right? So it's like you're kind of just okay with continuing to speculate, like, oh wow, look how much these dTAO tokens have gone up. I might as well just hold. You know, they like none of my principal was ever at risk here, so I think that just will lead to bigger and bigger bubbles for that reason. Yeah, there will be some sophisticated people who will, be okay with selling and trying to correct them, not necessarily correcting the market, but just locking in some gains. But not everyone will be acting rationally. That's the whole point of bubbles, right? Like people don't think rationally. Um, and also, I think anybody who is monitoring prices that closely would already be active within detail. So, the whole idea, the whole point, in my opinion, of something being risk free, or I like to think of it more as passive, is that you don't have to pay attention to it. Um, so yeah, like there will be some people at the end of the day that will sell into some of the high prices, but I think it's pretty safe to assume that they will be in the minority.
Oh, I don't think so at all. I mean, there's a lot of unsophisticated people receiving the VVV airdrop yesterday, and quite a lot of them selling it this week. So, like, I don't think it's requires that much sophistication to sell, especially when it's in your best interest.
Yeah, I have to say I disagree with Sammy. There's empirical evidence, historically immense data. We can ask DeepSeek R1 if you want to see oodles of mountains of data. Airdrops are always dumped. That is a fact. People do not hold.
And the question here is between actually people dump almost always and people selectively dump. As the default, because we're not saying that people can't have the choice to pick their flavor, right? Do you want to be one that sells automatically? Do you want to be one that holds long term? So Big Red actually put something into the chat here, which I think was actually a great comment. He said, the answer to this question is the thing that drives the most real value. And I think that that's a very interesting answer because it makes you think about like what exactly is the real value. And I think the real value comes from making a mature market. So there's one argument that if we auto sell the dividends, the consequence is that the people that they need to actively allocate into the subnet tokens, and that makes for a mature market. There's another argument, perhaps on the flip side here, that if more people are holding them, then there's more participators. There's more participants, even if they're passive over time. We're talking about a much larger group of people that do indeed actually interact with the protocol, whereas they wouldn't naturally. I mean, I'd like to hear from your perspective there, Joseph, on that.
I mean, I'm just in favor of mechanisms that more closely mirror free market capitalism, where you have to basically express your conviction using capital allocation, which is just kind of how the stock market works. Like, if you've earned capital somehow in a free society, and you want exposure to upside of things that you think for subjective reasons or other reasons could have upside value or increase in value, you make those purchases and allocation decisions. At least that's how the stock market has worked since the beginning of, the 20th century. Airdrops don't really exist in conventional capitalism at all. There's some people proposing that, there's like sort of like a birthright, sort of basket of stocks. Like Brad Gerstner is proposing this from Altimeter Capital, as sort of the American freedom bill. I can't remember the name of the bill, but it's American something, where when you're born, you're just given $1,000 basket of the S&P, and by the time you're an adult, there's just sort of like an equivalent of an airdrop, but like you're locked up until you're an adult. I don't think that like the lockup concept exists in crypto, which is why people just do the dumping.
So I just want to touch on that real quickly. If we're using the analogy of the S&P 500, holders aren't actually getting airdropped 500 companies and then being told to sell the ones that they don't believe in, or the ones where the prices ran up so much, and to lock in profits, right? So I think the point here is that these people receiving dividends are going to be making a binary decision, which is either sell all or hold all. And so I think that's the point that should be focused on.
Big Red, welcome to the stage.
Hey, Gons, can you hear me?
Yes, loud and clear.
So, thanks for touching on my point. And I appreciate everything you guys are doing here. Like I've read the papers, lots of math, very hard thing to actually execute. So, first of all, thank you. Said the thing that drives real issue you have, maybe not so much as issue as question of detail, is you likened it to the S&P 500. And if you want to create a business that eventually issues stocks or issues a stock and gets into the S&P 500, the way that you make money as the founder of that business is to eventually sell it to someone else. And there's nothing wrong with that. In fact, it's a good thing. That's how the capital markets work. But to sell it to someone else, Wall Street has to go in and look at all the financials. Everything has to be heavily audited. It has to be very clear. And there's exceptions to the rule, but it has to be very clear that there's a real product with real value, with real profitability, real revenue, real profit, et cetera, et cetera. To then sell to a bigger investor, cash out on the business you created. With dTAO, say you're creating a new subnet, and the way that you're going to make money is by holding your own subnet token and eventually selling it because it appreciates in value. That's fine and good if it's done in the right way, in my opinion. You're eventually selling this business that you created, the value of which is stored in your subnet token. How can we make it so that when you're selling this to a new investor, cash in on the business you created, that they know that they're buying a real business with real revenue and not smoke and mirrors? And how do we create it so that that incentive is greater than the incentive of just creating a flashy UI, attaching a product that may or may not be legit to your subnet token, and just luring in the next investor to dump it on? How can we create that accountability so that the real thing that's incentivized, the real thing that gives bittensor actual value, is that people are held accountable for creating real things that drive real value in the real world? So sorry, I know that's a long question, but yeah, that's my
it's
question.
yeah, exactly, and it's something that we've, I would say, focused on myopically from the very beginning about, like, first of all, what is the tokenomic design that best creates a efficient, intelligent market, right? And like ultimately that's sort of the basis of your question, Big Red, right? It's like if the market is incredibly inefficient, then there's no sense making, right? Like this is a common strategy in meme coin Ponzi-nomics, right? Let's just attract people with upward price mobility by constraining the supply that's available for purchase, and then getting a maximum market cap that gets attention. People think billionaires are being made, and the price signal is the thing that is the most attractive and gets attention, and then investors simply flock to that, and you get a lot of people that are hurt over time. Thankfully, in the cryptocurrency market that we've lived through over the last 15 years, things have all just been going up because of the absolute explosion of capital generation occurring by the switching of the financial system over from the US dollar to Bitcoin, my estimation of what's happening. So I believe that the answer to those questions is, number one, no pre-binds, slow issuance of the tokens over time. There's not much to sell. That means that there's not a large market cap, which means there's not that many people that can be hurt. And also, there's the people that are participating in the design are intelligent individuals that have chosen to participate, and that there aren't large holders that have insider abilities to hurt individuals. Like there's only we can only do so well, right? As you imagine, Big Red. But like it's a very good question. So, but to the question at hand, right? It is actually relevant, right? So which of the following design choices do you think is the one that creates an efficient, intelligent, sense-making market that privileges or builds, individuals and technologies that do indeed create value? So which one would you say, Big Red?
Man, put me on the spot here. That's a great question. Can I answer that question with a question real quick? So one of the things that's been so like beautiful to me about BitTensor from the start is it's always been like a evolutionary process of becoming anti-fragile, where and you've always touched on this from the beginning, is if a system allows manipulation and grift to happen, it will happen. And we shouldn't, and instead of having a witch hunt for those actors that take advantage of the system, we should instead focus on making the system so that it's impossible for that to happen. So I guess I kind of see dTAO as just the next evolution in BitTensor and achieving that mission, which I feel like you would agree. I think I see your vision on that, is how do we prevent grift from being easy and happening? And what's preventing me as someone who wants to start a subnet from going out, creating a flashy UI, buying up a bunch of my own tokens, advertising all over Twitter and everything, saying, hey, look, here's my product. It's quote unquote powered by BitTensor. And on one hand, investors just need to be more intelligent and be able to see that, okay, if it's not actually powered, quote unquote, powered by BitTensor, then it's not, and they shouldn't invest. So if there's, to a certain extent, as long as there's unintelligent investors out there, then I feel like it's hard to solve that problem. On the other hand, how do we force people to create products that are actually powered by BitTensor? Like, what makes me want to use BitTensor to build this product? What, like, show me, like, if I'm an investor, show me as a subnet owner, how are the miners powering this product? How is this product better because of BitTensor, or how would this product not exist if it were not for your incentive mechanism and not for the miners and not for your ability to craft a product out of the output of those miners? So I know I'm not really answering your question. I guess I just want it to be very, very transparent, as transparent as possible to potential investors as to where is this value actually coming from? Why is BitTensor making it possible for you to create this value, whereas maybe this value wouldn't be as valuable or possible at all otherwise. Um, I know that's
Right.
super vague, but am I making any
Well, I
sense
mean,
there?
it might be a bit of a divergent answer because I mean, like ultimately, this is just a pitch for the power of bittensor mining, which we could go through subnet by subnet, explaining like how it's been extremely successful to use this form of capitalism to create like best in class everything's, right?
Right. Yeah.
What's the advantage of using bittensor itself? Is like, well, okay, we have incredible network effects. We have the best mining community in the world, probably that is most diverse. Like, is there a more diverse mining community anywhere in the world? Right? Like, there's Bitcoin miners and Ethereum miners. Okay, sure, but we have like the everything miner here, which I think is really interesting, and that is not something that's not something you can take away. I think that's like absolutely an aspect as far as I'm concerned of real tangible value inside the ecosystem. And then on top of that, right, like the whole design here is also about like how do we create liquidity for these projects that we see as adding value into the ecosystem using this internal market mechanism and accounting system. That it being designed well and being fair, but also being rewarding is the best we can do, right? Like, so eventually it comes down to, can we build the most efficient system? The most efficient one is probably the most fair, right? Because it creates the best outcomes for people that are actually performing well. So the best we can do is say, hey, look, we're going to give liquidity into your projects if you can perform well in this efficient market. So it really comes back down to, in the context of the conversation about dynamic TAO, is like, well, which one is the most efficient, right? And so the airdrops, airdrops or TAO divs, right? So there are people voting with all sorts of different emojis here about which one they think is best. But Dave, you're please.
Yeah, I have a sort of a question along these lines, because as far as I sort of look at it, I'm sort of in favor of the TAO dividend, largely because I think over a few months, because of TAO weight, you're going to have a new crop of validators who will show up and basically rebalance things in alpha, because you're going to get a disproportionate return holding alpha tokens, versus sitting in root. So I'm curious if that like is one something you see as well, but it feels like this is something that's most impactful in the first few months versus long term.
I actually disagree. I think that it will have very long-term effects, the choice here. This is why I'm on the stage again, second week in a row, discussing this one, and have had it out a number of times with confidence and also people in the RAW channel. One consequence of the non-airdrop strategy is, and as I said, there'll be a lot of people that don't have any exposure to the other side of bittensor, let's say. And that will have long-term effects to perhaps the cohesion of the ecosystem. Like it's really hard to peer into what that will mean. I'm less concerned about the short-term effects of the root div selling effect on prices. I think it probably would be positive for the creation of efficient markets to have this initial selling and then lower prices that go on to be higher eventually over time. It's more about the eventual distribution of ownership across the ecosystem that I am concerned about. Does that make sense,
Well,
Dave?
well, maybe we're kind of coming at it just from two different angles, because I do worry a lot about subnet participation. Obviously, as a subnet owner, I think it's important that TAO holders are engaging in alpha, and I think that the structure in the first 30 to 60 days with TAO weight will put a damper on that. But my sort of view is that is better for the long term of the ecosystem. But I guess what I was getting at is I think that once TAO weight, um, as that starts to go down the curve and you sort of pass 50-50 and you move beyond that, you start to get a lot of incentives to be engaging in alpha, where the return is just so much higher than sitting in root.
Right, and the markets are more well defined at that point. They're more liquid. They have Lindy effects. They've been around for a long time, and so people can much more easily allocate into them and take a piece, right? So if what you're saying, like if I understand what you're saying, is that okay? So there's initial distribution of tau dividends. It's actually irrelevant compared to the long term staking and unstaking of root participants that will actually determine where the ownership is.
I think so. And I mean, look, one thing I sort of wish we were able to do is it's kind of another RAL games with like this structure, because I do think it would be very different, in terms of how that plays out, because the benefits of engaging right away are diminished a bit. Um, so, um, yeah, I mean, I guess the testnet obviously I've been playing around on testnet, but I just think the way in which people participated from the beginning and sort of were incentivized to participate in the beginning was just a little bit different and gave us some different data. But yeah, I sort of view this I hope that the design where the returns are meaningfully higher participating in alpha sort of do drive that incentive. And we're probably crossing that a little bit later, but maybe that's better for the long term of the ecosystem.
It's a very, very interesting question about the returns. Actually, Fish, you have some points on this. Why don't you speak to that? If he's still online, he can speak in a couple minutes. Dr. P, you wanted the stage, Nick as well. Feel free to interject. Nick, Dr. P.
Yeah, hey. So I was somebody who last week was trying to at least show everybody what some of the benefits of the airdrop mechanism are. At this point, I think that I'm convinced that the direct swap mechanism is the best for market efficiency. It's going to create the best long-term outcome. I do think in the short run, it's going to be much worse. But longer run, I think what you're looking for, Const, is efficiency. The one big benefit that airdrops had is that you can distribute the supply a lot better to create a more like a less kind of cornerable or a less manipulatable market. But I think that the best solution to solve that is by giving the optionality to airdrop. So then people who, if they do want to dTAO access, they can get it, and that will help distribute the supply some. But having the default claim or the default set as the direct root swap, which will rapidly push the values of the bad subnets to zero. So yeah, I'm as someone who was kind of on the fence about it, I'm on board for the direct swap.
Well, I'm happy to know that, Nick, that you're a deep thinker and not and actually trying to answer this question with us, because that you've actually switched sides. It's clear that there's like a lot of different perspectives here, and it's a very deep problem. Like this is why it's on the stage right now, and like we're making history in some sense by deciding this as a community. But so thanks Nick for that point. Sammy's on team Nick. Easy Trades, are you speaking?
Yeah, well, if I just have a minute to give my opinion on it. I know I haven't read the paper yet, so I'm looking forward to reading that. And I certainly don't have Constor knowledge or the OTF's team's knowledge, as far as, because I haven't looked at the simulations. But I mean, I do know that the airdrop method, you distribute the supply better initially, but you lose the ability to see the subnet value, because that person that received the supply, if they're not even checking their wallet, then they didn't make the active choice to go and buy the token. So that makes that harder. So I mean, aside from just an initial liquidity problem, I'm for the direct swap method. It's certainly reasons to have a fairer market with that method.
Just
Here's
as a
an
brief argument. just as a brief argument in favor of the airdrops method, it is extremely straightforward to, as a root staker, to perform exactly as well as you would if we just did the auto selling, because you can manually auto sell. I mean, it seems quite straightforward to perform equally as well, and it gives people the optionality to perform better and be more risk on through root. So I'm definitely strongly in favor of the airdrop strategy.
One point to make here, Max, is that with completely active participants, the default is irrelevant. It makes no difference, actually. It's one way or another. If people are choosing to stake or choosing to unstake, it won't affect things. So what we're actually speaking about is like your grandmother, right? Specifically in Lithuania. I know she's out there mining a lot of subnets, and so Fish, please.
After all that I've thought about this, I think it's obvious that the best solution isn't one or the other, but a mix of both, which is why I think people should have a choice to pick between the two. I see pretty obvious pros from
But Fish, we're speaking about the default. So the option to choose is there, but what's the default?
and it's also good
Is
to
it
have some
relevant?
people automatically selling those divs. Can you hear me?
Yeah, go on.
And it's also good to have some people selling those divs to have the downward pressure on the subnet. Yeah, I'm not surprised if I cut out. My internet is really bad.
And just to interject really quickly. I mean, I don't know if this is programmably possible, but you know, if you did do the airdrop method and somebody held their alpha for 1 month, 2 month, 3 months and didn't do anything, there was no engagement with that token, maybe it's possible to do an auto sell then. Basically give the person time to make a decision whether, hey, do they want it, are they even here, are they checking their wallet?
I think the way that you fix that is kind of as people are proposing, that you do the direct swap by default. The big concern with the airdrop is that you have passive holders who aren't going to efficiently allocate their capital. They're not going to be sellers differentiating between the different subnets. And I strongly believe that if you have that as the default, they probably won't be, and you're going to have a less efficient market. So if you have to kind of opt into the airdrop strategy, and they're either one participating in dTAO in the way Kant says is kind of like an S&P 500, so they're still bearing risk with their dividends, or they're actively allocating between them. But you know that they're active in some way, so you can have a lot higher confidence that the market's going to be efficient by defaulting people into the direct swap, but then giving an option for airdrop.
Interesting thing to put into the conversation here that people should be aware of is that it is not clear if you will perform better with the direct sell or the airdrop, because it really actually depends on the long-term price discovery of the subnets on the ecosystem. I'll give you an example. So let's suppose that there is just one subnet that takes 100% of the weight. If you're somebody, and that price just goes up and up and up and up, everyone else goes to zero. If you're holding TAO on, if you've been selling your dividends on root, eventually you don't get any more dividends because the TAO weight tails off, and you get about 1/5 or 1/6 of the dividends you would normally be getting. Versus the person that allocated into that subnet and now has a chunk, and they're performing very, very well because they held their alpha, and now they're getting those dividends, as opposed to the person that has their TAO and is trying to allocate in and can't get in because they have to buy. That's a situation where TAO dividends is worse. But there is also situations where TAO dividends are actually better. So for instance, if you are selling all of your dividends into TAO, and there's a massive churn on the subnets in the ecosystem, so the first 64 go to 0 and the next 64 do well, the people that have taken their tau out of the subnets and are holding them on root are now making those dividends in the new subnets with additional weight in the ecosystem as a consequence of the dividends being paid out to tau. So it's not actually even obvious which one will perform. So if you're somebody that thinks there'll be so much churn, the first 64 are dead, the next 64 and so forth are going to perform, and there's going to be tons of churn. You would say that the tau weight is actually the automatic selling is actually the best thing for the default player. I was actually quite surprised to realize that, but it's true. And it does actually. I'm sorry, does that make sense to the people in the crowd here and also on the stage?
So what is your opinion as what's the best method, and then why? Just a few reasons, so I understand personally, because I'm not exactly sure your stance on it yet.
You know, it's funny. I debated this all last night, and I had originally thought that airdrops would be the best for the default player, and then I was like, well, it's obvious we should make the default strategy the best that we can. We should try to help tau holders, even if they're just passive. That's the best thing to do. It comes from your heart. But then I was actually shortly dissuaded of that opinion and realized that I actually don't know if it's better to in pure economic value to take tau or airdrops, because there is a situation where the prices are pushed up by speculators and the tau holders are pulling
Let's check and see if there's any chat here, because I didn't look at all. Let's see. Cheap viewers. Oh, thank you, SMB. Excellent. Very good spam chats. I love it. And then we should check X, shouldn't we? Right? I need to upload a thing later because we did a thing yesterday about DeepSeek and I need to catch that. Sweet algo juice. Okay, now we can check YouTube chat, but I think it's dead. So expect that later, and then I don't know, I don't really have any other plans. I've been fucking very much not on top of the YouTube stuff lately. So we'll see.